Nice to see you guys from eToro. I have a fine guest here in Frankfurt. Matti Greenspan, senior market analyst, is here. Matti, when you look after the market at the moment, what do you think?
Opportunities. Yeah, always opportunities. Things are moving, and that's how we make money.
But on the other hand side, one guy is at the moment the first guy who's moving the market. Donald Trump, I think so.
Well, I don't think, as much as he would like to think that he doesn't have total control, obviously there's many other players and everybody makes their own decisions.
But at least when you see into the market, yeah, it's going down and up and down. What do you think on the rest of the year?
There is a lot of volatility right now in the market, and volatility is good. I don't know that it's specifically related to Donald or Xi Jinping or anybody else. I think that the market has come to a critical point, a pivotal point. We've seen a long time, several years already, where markets just go up, they don't go down. And now we're seeing the dynamic a little bit differently. It means that people do need to make adjustments in their portfolio to trade a little bit differently, to be nimble, to be prepared to go in and out of the market rather than just to buy and hold like they used to.
Okay, so I have to move at the moment a little bit faster, I think so.
Faster maybe, or maybe just make adjustments to safer assets rather than only the risky stuff. Stocks and cryptocurrencies. Maybe consider holding ETFs, bonds, those type of things. Those type of things in your portfolio can be a great complement.
eToro has the whole. You have the CFDs, you have the stocks. Nearly now, you have the German stocks, the MDAX and the TechDAX stocks. You have the crypto. At least you have it all. And at the moment, when you have an overview, what are the most trading chances?
What do you mean?
Well, when you see at the people, what are they trading at the moment at most?
Well, we do see a lot of stocks and cryptocurrencies. We saw a lot of people making adjustments to their stocks portfolio, particularly because there is a feeling that we might be coming to the end of the cycle. So we see people also doing long and short, or maybe just pulling to cash in some situations.
When you look after the political situation, USA, China.
Well, USA, China, Russia. I think it's a three-pronged. It's an interesting. I hope for the best for everyone and for the political situation and for the world. I think it will be better if things are smoother. But we do need to react and be aware of what's happening.
And the Bitcoin is rising down at the moment. What is your opinion for this year? It's okay or?
At the moment, last few weeks, Bitcoin has been remarkably stable, 6,500 to 7,500, $1,000 range, which is a nice trading range. People can play both ways, buy low, sell high. If we see a breakout of this range, we might reconsider that position. But I think that a lot of our clients are long-term holders of Bitcoin, and they believe in the power of the future, and they believe that Bitcoin is going to be part of that. So that's why they want to hold that in their portfolio.
And what's your opinion of that? Is it a long term?
I think that yes, if we look back over the last few years, it's certainly been a remarkable one to hold for the long term, yes.
We have a lot of analysts in Germany, they say Bitcoin will die, and on the other hand, Ethereum or Dash will come up.
I'm a believer in Bitcoin, but maybe it's not for everybody. Certainly, I also like Ethereum. I think Ethereum is one of the most exciting cryptocurrency projects, and we see a lot of innovation happening there. And obviously, as with any investment, you have to diversify yourself. So think about the tech stock, bubble of 2000, right? Yeah. So you had people, you had Pets.com and you had Yahoo, but you also had Amazon and Google. So the best way to attack it is with a diversified portfolio, obviously with your low-risk assets being the bulk of your portfolio, and then only a very small portion allocated to the higher-risk assets.
You speak we have Facebook on, we have Netflix. They're raising at the last years higher and higher and higher. Yeah. More chance or more risky at the moment?
Well, the big tech stocks are in a risky place at the moment, specifically with everything that's happened with Facebook. We see there's interesting data regulations that are hitting right now in Europe, which is the GDPR regulations, which is going to change the way that companies are allowed to gather data and share data and use it. So this this is going to change the way things that work in Europe, and also within the last 2 days we saw Mark Zuckerberg testifying before Congress, who are prepared right now to introduce some bills to change the way that big data is stored, and this can have an impact on those stocks because a large portion of their value is derived from big data and the way that they use it.
I see a little bit jokey when he was about to the Congress. The chair was rising up.
Yeah. Well, he was on a booster seat. Yes. Right. Yes. Well, look, it's a 4-hour session, 5-hour session. People grilling you. It's not a simple place. Yeah, it's not a simple place to be, certainly. So, I think that even you or me in that situation would come to the edge of our patience. But Mark Zuckerberg, somebody who's sometimes seen as maybe a bit robotic or whatever. So for him, I think that was a unique situation as well. He's not used to talking in front of a camera like you and I.
Yes, and there was a very jokey news into the market. It was coming out of Amazon. Jeff Bezos and Donald Trump, they are not really at the end friends. And so the message was, Jeff Bezos from Amazon is buying Twitter, and the first guy he's taking out of Twitter is Donald Trump.
That would be interesting. I used to follow Donald Trump back when it was exciting. Lately, his interesting tweets or important tweets come to the top of the news cycle anyway. So
you do every day a market specialist newsletter, we have to say, like a market senior analyst. When you look after this year 2018, it will become a very different year, will become a risky year, more risky than 2017?
I think we've already seen a lot more volatility.
Yeah.
So we do need to be careful. This is why I'm saying that maybe to hold the lower risk assets in your portfolio and be nimble. If you're not sure how to do that, you can also copy people who do, or use the copy funds. Actually, I saw the Momentum DD copy fund held up very well in the throughout the February crash and throughout the more recent geopolitical turmoil and the trade wars. It actually held up nicely because we did see people who were inside of the copy fund, pulling to a cash balance, holding on, maybe taking profits on some of the stocks that they've been holding for a very long time, and actually it remained remarkably stable during the period.
But these times, there's so much volatility in it. A lot of people are going there and said, okay, I want to follow someone, perhaps he's better than me, I want to copy someone. You can say that?
For a beginner, yes, if you don't know what you're doing, probably it's better to see somebody who does have good stats, who has experience in the market, knows what they're talking about. At least as a training wheel, at the very least, to get involved and ask them questions, talk to them on their wall, and this is asking questions is the best way to learn.
Are you looking to Germany too?
Always, I'm looking everywhere as much as I can. Obviously, you can't see everything, but I like to keep a very global and macro focus.
Emerging markets.
Speaking of which, we are in the beating heart of the German financial system, right here at the
DAX.
Yeah, at the Frankfurt DAX. I wanted to ask you. Tell me, I understand that we have some new German stocks on the platform.
Yeah, you have. I like it. You want for the tech DAX, for the MDAX, a lot of shares, because I say to my shareholders, believe in stocks. Buy and hold for 10 years.
There's nothing that beats that type of strategy, like we mentioned with Bitcoin as well. Over a 10-year period, statistically, stocks do not go down. Is there any particularly interesting stocks within the bunch that we've added that you feel would be good to add to my portfolio first?
Yeah, absolutely. I'm looking at the MDAX stocks, not alone at the DAX 30, not at the big ones, a little bit smaller ones I wanted, specifically. And 50 coins, 50 stocks in there. And I like it very much.
Okay, wonderful. Yeah, I added Deutsche Bank to my portfolio.
Yeah.
I thought that this would... Yeah, after the shake-up, of course. I liked John Cryan. I thought he was a very good man, but it seems that he just didn't have the heart to do what needed to be done. The new guy saving, I think that he will very likely go in. Right now, there's about 100,000 employees in Deutsche Bank. It's very possible 10%, 20% will be gone. It's not a very great thing for them, but I think that can return the bank to profitability.
Yeah, they have to get more trust in the bank back. And I think the stock is rising up.
Correct, 100%.
When you look at now, after a little bit of beginning of the year 2018 and now on the rest, what are you expecting?
Well, in the short term, we'll probably see a lot more volatility. We'll probably see a lot more geopolitical mess, a lot more updates about this big data saga that we're seeing. I hope that things level up and turn back to a gradual period. But as far as volatility is concerned, you can trade it. I mean, you can start. There's assets like VXX on the platform, right, which is the short-term volatility index. If the volatility continues, VXX goes up. Or gold, for example, which is traditional store of value. We saw it testing the upper part of its range. If we see a breakout there, this can be a very strong movement.
What do you think about gold when we are on the scene?
Gold is a traditional safe haven, for thousands of years before Bitcoin.
Absolutely.
Yes.
Absolutely.
It reached almost to an all-time high of almost $2,000, and now we're trading at $1,350-ish. So it's far below its all-time high. So I think that if you look at the charts over the period, it almost looks like a Bitcoin, but much slower movement, much more gradual, like a liquid market should be. Yes, I think that everybody, and obviously this is not investment advice, the usual disclaimers apply. I think that most people should consider holding gold in their portfolio, at least as part of it, 5%, 10% as a hedge.
Okay. When you, at least, my last question is, when you now have to get a chance to say a shareholder to look after someone special, after something special, what do you want to say?
What do you mean?
Well, you have a special stock, you have a special view to a market, you have a special one, you say, look after the cryptos, or look more after the shares, after the stocks, look more after the ETFs at the moment, or after the CFDs? Yeah.
So the issue is usually the opposite. People come with a preconceived notion, they come in, they want to trade something specific. And then they allocate their entire portfolio to this. This is a bit of a problem. So the best way to do it is to try as much as you can to learn about other things that you don't necessarily know about, and to add them to your portfolio to build a diversified portfolio. You can use the in the portfolio tab, you have the charts, the circle charts. Those are very good at taking a look at what is your allocation within the platform on a percentage terms. And then you can from there diversify. Of course, the ETFs, indexes, those are much lower risk assets, especially for long-term holdings. So those type of things can take up a larger part of your portfolio. And then when we get into individual stocks or cryptocurrencies, those are more high-risk assets. So those should be probably a smaller portion.
Okay. You heard it, ladies and gentlemen. Thanks to Marty Greenspan, Mr. Senior Market Analyst from eToro, staying here in Frankfurt at the Stock Exchange.